Ladies and gentlemen, good day and welcome to Mamata Machinery Limited Q2 and H1 FY26 earnings conference call hosted by TIL Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sayam Pokharna from TIL Advisors. Thank you, and over to you, sir.
Thank you, Yusuf. Good afternoon, everyone, and thank you for taking out the time to join us in this Q2 and H1 FY26 earnings conference call of Mamata Machinery. The investor updates, including the investor presentation and press release, has already been uploaded on the stock exchange and on the company website. To take us through today's results, we have with us from the management team Mr. Apurva Kane, Chief Executive Officer, and Ms. Madhuri Sharma, Company Secretary and Compliance Officer. We will begin with a brief overview of the financial and operational performance in the H1 from Apurva sir, followed by a Q&A session. Please note that any forward-looking statement made during this call should be considered in conjunction with the risk and uncertainties that we face. These risk factors have been detailed in our prospectus document and in our annual report. With that, I would now like to hand over the call to Mr. Kane. Over to you, sir.
Good afternoon, everyone, and welcome to Mamata Machinery's earnings conference call for the second quarter and first half of FY26. It's a pleasure to connect with you again and take you through our performance and developments over the last 6 months. Let me first begin with an overview of our financial performance. Mamata delivered a healthy set of results in Q2 and H1 FY26, driven by well-rounded growth across all key metrics. We recorded a 25% year-on-year increase in revenue for Q2 and an even higher 31% increase in H1 FY26 compared to previous years. We continue to maintain a 70-30 ratio for export to domestic sales. Profit after tax for H1 FY26 was higher by 47% year-on-year, demonstrating the inherent operating leverage of our business. Q2 profitability saw a marginal decline on a year-on-year basis, primarily due to higher spending on exhibitions, marketing, and travel during the quarter. These expenses stood out at about 5.3 crores in Q2 and 9.6 crores for H1, translating to increase of 47% and 44% year-on-year respectively. This step-up was largely budgeted for, as few major international trade shows were scheduled closely together within this period. Some of these are also scheduled in second half of the year, so we have also budgeted certain expenses in H2. Such industry events help us build a global visibility, strengthen customer engagement, and ultimately support long-term growth. I would also like to reiterate, as we have discussed in previous calls, our business carries an element of seasonality. Q1 typically tends to be the slowest period, while activity builds up as we move towards the second half of the year. Q4 in particular is usually our busiest quarter. Hence, sequential variations in quarterly numbers are a standard feature of our yearly operating cycle and should be viewed in that context. This also applies to our product vertical-wise performance as depicted in our slide number 4 of our Q2 investor deck. Product vertical growth should be looked at on a rolling average basis, as there may be some lumpiness based on order deliveries. Case in point is co-extrusion revenue for H1 FY26. While revenue is down, we have booked significant orders recently and some are scheduled for delivery in H2. Let me now take you through some key operational developments during the quarter and the first half. As disclosed in our recent filings, Mamata secured 3 new orders for advanced 9-layer blown film plants. 2 of these will be delivered within the current financial year. These are technologically sophisticated, high-value co-extrusion solutions that align perfectly with our strategy of positioning Mamata as a go-to partner for customized high-end projects in co-extrusion space. Alongside, we are also pursuing additional orders for similar 7 and 9-layer co-extrusion lines, which we expect to materialize in coming quarters. At PAC Expo USA event held in Las Vegas in September, we unveiled our new HFFS duplex packaging line, a second-generation product following the success of our HFFS Simplex series. This upgraded packaging line delivers higher outputs, better efficiency, and advanced functionality compared to its predecessor, and was very well received by our North American customers. We are confident that commercial orders for this product will follow shortly. We also showcased 2 new machines at K2025 in Düsseldorf. K is one of the largest exhibitions in the world for plastics and rubber. The first was an innovative wicketer capable of handling both conventional wicketed bags and side seal bags with non-wicket flat stacking, thereby expanding operational flexibility for our customers. The second was a pouch making machine designed to run fully mono-material recyclable films, underlining our continued push towards sustainable flexible packaging solutions. Mamata continues to be among the pioneers in recyclable flexible packaging technologies. In recent months, we achieved meaningful progress in developing next-generation machinery solutions capable of using recyclable or monomaterial films. These innovations address key industry challenges that have historically limited the adoption of recyclable flexible packaging in the industry. Despite all of the government regulations and push, by offering variable, viable and cost-efficient solutions without compromising on packaging quality, we believe this will significantly accelerate brand owners' transition to sustainable flexible packaging while enabling them to meet their ESG and long-term sustainability commitments. We view this development as a positive step towards future growth. These were all the important operational developments. Lastly, I would like to touch upon a micro development and our business outlook. The recent tariff-related headwinds in the US market have created some temporary uncertainties for exporters across India. Our assessment is that these headwinds are transient, and we remain fully committed to our presence in US market. Our relationships with customers in this region are strong and built on long mutual trust. At the same time, our diversified product portfolio, growing global footprint and increasing penetration in alternate export markets provides us with natural hedge against such developments. As on date, our order book stands at 144 crores with a similar 70 to 30 ratio of exports to domestic sales. This solid pipeline gives us visibility for the remainder of the year. With that, I would now request the moderator to open the floor for questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Nishita Shanklesha from Sapphire Capital. Please go ahead.
Yes, hello. Am I audible?
Yes, you
Yes,
are.
please go ahead.
Yes. Yeah, I just had a question. The order book of 144 crores that you mentioned, can you say what is the execution timeline for that order book? And also from the 70% exports, how much is our exposure to the US market?
Absolutely. Out of the 144 crores, as we have earlier mentioned, there is one 9-layer line order that is going to spill over into H1 of next financial year, the value of which is approximately 10 crores. So that is first part I have given the answer. The second is that out of remaining orders, 70% are exports. Out of that 70%, the US exposure is about 15 crores.
Okay, understood. So 144 crores, 10 crore order will spill over in H1 FY27. So the rest 134 crore order are we expecting to execute by the end of H2 FY26?
Yes.
Okay, understood. And from this order book, 70% is US, and from that 15 crore is the US exposure. Is that correct?
Correct.
Okay. Now, if you would like to, if you can give some guidance on the top line for FY26 and FY27 and some margin guidance. Is margin going to stay in the range of 15 to 20% EBITDA margin?
Before I answer that, I would like to clarify one thing, that we still have a window for order intake from the pipeline that we can execute in our current financial year. For our converting line, that order intake window is about 6 weeks. So we still have 6 weeks in which we can receive and book new orders and execute in current financial year. For our packaging lines, that window is about 4 weeks, and for our extrusion line, that window is 2 to 3 weeks. So that is a rider that I wanted everybody to note. Coming back to margins, yes, we are confident that we will maintain the margins as for our previous year. You see some shrinkage in margins year on year as compared to last year, and that is largely because of higher exhibition expenses that will spread out as Q3 and Q4 progresses and as new execution comes into play.
Okay, and so you are saying in Q1 and Q2 we've done a margin of 8% and 12% respectively. So so we are expecting much higher margin in Q3 and Q4.
I think we did about 14% last year. We see something similar.
Okay. Understood. And anything on revenue for FY26 that you see?
Like I said, we still have a window for new order booking and execution in current financial year. That window is approximately 6 weeks. So we would like to wait for 6 weeks before we can give a figure, or we can float a figure for our investors.
Okay, perfect. Thank you so much.
Thank you. Participants, to join the question queue, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next question is from the line of Lakshmi Narayan from Tunga Investments. Please go ahead.
Yeah, thank you. I joined the call a little bit late. Just one question on the packaging segment, especially exports. Can you just help me understand what is the order book like and what kind of clarity we have when compared to when we started the financial year?
Last year, our total packaging division performance was about 46 crores. Right? That was in the FY25. As of now, our assured business stands at about 63 crores as compared to 46 crores. Currently we sell our packaging machine lines only in India and in North America.
Okay.
Right? Our current pending order book is approximately 20 crores.
Okay.
Of which crores is for USA and balance is for India.
Sorry, how much is for USA after 20 crores?
6
crores. Okay. So the thing what you're saying is that for this year at least we will do 60 to 65 crores of revenues in the packaging part.
Yeah, we should be doing that. Yes, comfortably.
And that would mean how many machines and what will be the revenue split between India and US? At around 60 to 65 crores.
Okay. So out of 65 crores, USA will be around 25 crores and the rest will be India.
And how many machines you expect, sir, from that?
That's about 22 machines.
Okay. And the realization is different between two geographies, or can you just give some indication on that?
That is something that I would not like to disclose on a public platform, sir.
Got it, sir. So when you started the year and where we are now, how is it going in terms of your own internal targets and budgets? Are we on a positive surprise, or are we actually tracking, or we have a lot to catch up with? How do you assess where we stand now?
As far as our extrusion is concerned, we are ahead of our internal targets. As far as packaging is concerned, we are in line. And as far as converting is concerned, we are lagging a little bit, but as I said earlier, we still have a 6 weeks window to make up for it.
And in terms of spares and in terms of other stuff we actually sell, how that is actually tracking now?
We don't really track aftermarket sales. For us, that is not important because it's not a significant part of our top line. It happens to be between 5 and 7%. So it's basically on need basis. Customers buy spares from us or call us for services and we provide. We don't really push for it.
Got it. And if you look at the India scenario, especially in the in food packaging, what is your read when you talk to some of these wafer companies and other namkeen companies and so on, how they are thinking for the next 2-3 years in terms of growth. And because I remember there has been some orders which were delayed, especially from the Indian Indian snacks firm. So can you just throw a light on that?
So first of all, the Indian snack firm, I will not name it right now, which orders were deferred to current financial year. They have been delivered. Not only that, the same company has placed orders for a couple of more machines. As far as namkeen industry or wafer industry in particular is concerned, it is growing at rate of double digits, definitely. On estimate basis, it's supposed to be around 12%. And so our sales are growing along with it in that particular industry. But there is something that I would like everybody on this call to understand. I did speak about sustainability, and that is a huge opportunity for India and for Mamata in particular. See, what happens is that the typical film structures that are being used by the industry today are non-recyclable. The recyclable structures that are currently available are either not able to provide protection from moisture and from oxygen to the products that are being packed, or if that happens, that it is far too expensive. Just to give you an example, a normal PET PE structure is being bought by brand owners at about 180 rupees. This is approximate figure. This may differ by 10 rupees here and there, but mean value would be around 180 rupees. And a good barrier monomaterial film compared to that is around 320 rupees, which is recyclable. We are the only company that actually makes co-extrusion blown film plants, so we understand rheology of plastics, and then we make pouch making equipment as well as end-of-the-line packaging machines. Now, we have been working on this extremely extensively for last couple of years, and we have been able to create a film structure by making special designs in our co-extrusion blown film lines that would allow somebody to make a good barrier film at a much lower cost. So we think that brand owners can access a good quality recyclable barrier film then at around 250 rupees a kilo, and that we consider a breakthrough. We have also created a complete ecology where we can offer converting machines that can process these films, and also end-of-the-line packaging machines on which these films can be run. So this is something that we'll be taking to brand owners in next few months, and we hope that this will bring the desired change and to some extent relief to brand owners, because then they will be able to meet their EPR norms much better at lower cost.
Okay. Thank you so much. I will get back with you.
Thank you. Next question is from the line of Sayyam Shah from Solidary Advisors. Please go ahead.
Hi sir, thank you for the opportunity. Am I audible?
Yes, you are.
I just wanted to ask, sir, what is our total US exposure? Because if I see in our investor presentation, it's around 30% odd, but in the annual report, it's quite lower. So can you just help me align both these numbers?
That anomaly you see is because, please understand that Mamata Enterprises Inc., which is a 100% owned subsidiary of Mamata operating from US, is responsible not only for United States of America, but is also responsible for sales in Canada as well as Central South America. So when we say sale of MEI 30%, that includes sales into Canada as well as Central South America and USA. If you purely look at sales within USA, then it amounts to about 15% of the top line historical.
Okay, and sir, the tariffs are applicable on the 30% at the on the sales which are done via Mamata Enterprises Inc. or only the sales which are made in US?
Only for the sales that happen within USA. There is no tariff applicable within USA for sales that are done by Mamata Enterprises into Central South America or Canada.
Got it. And sir, what was our order book in September 24?
Order book in September 24 was 131 crore. Compared to that, this year order book is 144.
Got it. Thank you.
You're welcome.
Thank you. Next question is from the line of Manish Goyal from ThinkWest Wealth Managers. Please go ahead.
Yeah, thank you so much, sir. I have a few questions. Just, I missed the order book comparative number. What was it, sir? You just mentioned.
So, Manish, the order book last year on 30th September was 131 CR.
Okay.
And as on today, the order book is 144 CR.
Okay. Thanks a lot, sir. Sir, couple of questions. Just on continuing on the sustainability aspect on recyclable films. So you just mentioned some numbers as to currently the barrier film which is available, recyclable film is 350. You mentioned, sir.
About 320 rupees a kilo, approximately.
Okay, and the development at our end in terms of what we have developed in terms of the structure that under that co-extrusion film which can be made from the machine, what we can provide, the price can drop to 50 rupees, which you claim that it is probably affordable for the global market.
I'm not claiming that it will be affordable. I'm saying that it will be much lower than 320, and therefore it will bring relief to brand owners.
Okay.
And this 250 is based on today's scale. As the consumption improves, that cost will also drop.
Sure. So, sir, how are we seeing this adoption? Because we are probably now at all the three machinery levels, like film production, converting, and as well as the end of the line packaging machine. So have we started getting some inquiries, and how is the environment on adoption of this type of film, sir?
So we were basically waiting for certain certifications to come in. Certifications regard to what is the barrier on vapor or what is the barrier on gas and things like that. And we wanted to have authentic information before we go to brand owners. So this is a very recent development. We have now received certification from a lab in Singapore as well as from Indian Institute of Packaging as to what is the actual barrier property of the film that we are talking about. And we plan now to take this as an alternative to some of the brand owners that we have identified to begin with. We will know more about this in next couple of months.
Oh, okay. And what is the level of competition, or maybe any competitive development which has happened, or if you can also what kind of competition you can see? In a simple word, sir.
See, we are leading this. So we are leaders of the pack. Obviously, there is a pack. The word that I'm using is a pack. So that means there's going to be competition. But since we will have the first mover advantage in this particular case, we should be able to garner a good chunk of the market expansion that will happen. Currently, the non-recyclable film consumption in India in FMCG is around approximately 1 million pounds or million kg और 10 lakh ton का अभी है consumption. Even if we think that 10% of that over a period of next 10 years get converted, that will be substantial business for Mamata as well as even our competitors. So we believe that this will overall expand the market.
Okay. So would it be possible that you probably offer all the three? Okay, so I think you have a different set of customers for co-extrusion and converters and maybe the brand owners. So as you have explained earlier also, fine. And hope that we probably see this any success maybe probably in near short term. Hopefully, sir. Sir, a question on our one-time expenses, what you mentioned in your opening remarks, which was, I just want to reconfirm that the one-time expenses you mentioned was 5.3 crores in Q2 and 9.61 crores in half one. So is this entirely one time or how should we understand this?
The difference between the two is one time. So it's about 4 crores additional.
4 crores additional in quarter two.
Yeah. Now this will get spread over Q3 and Q4. So from 8% PAT that we have had, we will recover it to our normal PAT that we have been giving historically.
Okay, so sir, but I believe the K trade was in October, which is the biggest trade show. So in this quarter also we will have some more one-time expenses, sir?
Yes, some of it will be there in the Q3.
Oh. So according to
and then after that in February we have a very large exhibition in India, that is Blast India, that is happening in Delhi from 4th of February. The total expenses is nearly 4 crores for that just one exhibition.
Okay. So if you can just roughly total up like what could be this one-time trade related expenses in the current year which we will incur, sir? Just a rough number.
So basically, we have published our last year's figures. Everybody knows that. Last year we spent on exhibitions about 8 crore in the entire year. This year we will be spending about 12.
Okay. Thank you so much, sir. Sir, were there any deferment of revenue booking in the current first half? Maybe some sales to US, because ideally what we probably have booked in US subsidiary is entirely the deferment what we had of roughly 23 crores in quarter 4, which have been finally booked now in quarter 2. This is right understanding, number one. And number two, are there any further sales exports what we would have done in first half would have got deferred, sir?
There was a deferment, but not a very big deferment. It was approximately 2 crores, not too much, in H1.
Okay.
Coming back to Mamata Enterprises, yes, your memory serves you right. There was a deferred sale of around 20 crores from the previous year in MEI, out of 31 crores that we talked about when we did the last earning call 6 months ago. Now, as things stand today in Mamata Enterprises, the execution in current financial year in Mamata Enterprises is approximately 41 crores.
Okay.
We have a pending order book of about 18 crores.
Okay. Fine, sir. Sir, thank you so much. I will definitely get back in with you, sir.
Thank you, Manish. Thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask question, you may press star and 1. Next question is from the line of Lala Ram from LRS Capital. Please proceed.
Hello, good evening, sir.
Good evening.
I have two questions. The first one is, you mentioned about the opportunity size for recyclable film, 10 million tons, of which even if 10% converts, that will be a significant opportunity. Can you convert that into actual requirement of machines or something in terms of business? How does that conversion work?
I would not like to hazard a guess because under the best of circumstances that will be guesswork. But I can tell you as much that we expect out of nearly 10 lakh tons of PET PE films that are being used, which are non-recyclable, a conversion rate of at least 10% per year. That would be about 1 lakh tons getting replaced by this film, and that is a substantial number by any yardstick.
Got it. And so this, you're saying 10% per year, or is it cumulative 10% over 5-10 years? What did you refer to?
10% per year. That will be the initial this, and then as you build up the success stories, it is likely to grow from there.
Got it.
And it all depends on the velocity at which brand owners want to work with. It is not dependent on us. Our job is to bring technology and present that technology to the industry. Adoption by the industry is not in our control.
So right now, the adoption from the brand owners will be driven by purely regulatory reasons, like EPR norms, or is there any other incentive as well?
So of course, there is a regulatory reason. India में बिना डंडे के तो कोई काम होता नहीं है.
Correct.
But besides that, there was a recent report where McKinsey did a survey of Gen Z in India, and the survey clearly stated that the new generation is quite sensitive to this particular aspect of non-recyclable packaging, and that the new generation is prepared to pay even little bit more if the packaging transits from non-recyclable to recyclable.
Got it. So right now, what is the regulatory norm from the government side?
Regulatory norms are EPR, and they are well stated. You can always read it up.
Okay.
It is called Solid State Management Rule 2018.
Got it. And what about international markets? What is the adoption there, and are we trying to exploit that market as well?
There is an adoption there where monomaterial barrier films are being used. But again, everywhere the problem is that monomaterial films by themselves, if you use, they are not more expensive than PET PE, but then they don't offer you the barrier from moisture as well as oxygen. As soon as you start using monomaterial films that have good moisture barrier as well as oxygen barrier, then the prices are going through the roof. I would not like to comment if this is actually because of the cost or it's opportunistic pricing by people who make this film. But I can tell you as much that we have looked at this aspect, and we have basically reduced use of very expensive materials, and therefore we have been able to make films that would allow a brand owner to get good barrier from moisture as well as gas at substantially lower cost. Whether that substantial lower cost is enough for brand owners to adopt this film or not is a question that will be answered in future.
Okay. One more question is, because of this transition, which of our businesses will help, all three of them, or is it one specific business that will benefit the most?
Well, extrusion is the mother machine, so the first impact you will see is on extrusion. The packaging machines sales is driven basically by the capacity growth of brand owners. But Because there are a lot of machines that are already installed in the market which may not be able to run such films easily. There might be tendency to replace those machines. So we think that there will be a replacement market in favor of our machines.
Got it. One last question. In the previous Concall, we have stated our aspiration to grow at 18 to 20% over medium to long term. Are we on track with that aspiration?
The aspiration has not changed, but to some extent we have been trumped, like everybody else.
Okay. Got it. So is it fair to assume that maybe this year lower and then we'll try to play catch up?
See, I have already said that we consider this challenge as transient.
Yeah.
Our commitment to US market has not lessened. In fact, our resolve to become stronger in US market has increased. The proof is that we have currently an extremely aggressive recruitment program to expand our sales team as well as our service team. We are putting in money in that market where in Pack Expo we spent something like $250,000 in that exhibition, and therefore we are fully committed to that market. Once whatever trade deal or India stopping to buy oil or some of these things that are not really in our control flip, actually whatever we are doing today will give us a fillip in that market, and we are confident that this will happen.
Got it. Can I squeeze in one last question? Hello?
Sorry? Could you please repeat your last question?
Yeah. So my last question is, over, say, long term, which is like 5-10 years, do you have certain vision of what Mamata could look like in terms of size, in terms of product categories? Today we are primarily in solid food products, right? Packaging that. We have spoken in the past about liquid packaging as well. Just want to understand right now what is the long-term picture with respect to how you want to build this company.
If we talk of converting machines as a division, which is our legacy business, we are considered as one of the top 5 companies globally. Right? We have presence in 80 countries around the world. Almost everywhere in the world we sell our machines, and we are well known for that. We would like to achieve similar milestones for our packaging machines. I have said this earlier too, that the engine for growth of Mamata is packaging machines, and we are fully committed to that. I have said this today earlier also, that as compared to 46 crores last year, we would easily be doing around 64 crores this year. So that delivers on our vision. It validates our vision that this kind of 40% plus growth is possible year on year. And as we start entering into Middle East, Africa and Europe for packaging machinery markets, we are sure we will be able to deliver something like that. So that is the vision. Whether we want to be a 10,000 crore company or 5,000 crore company is not really our vision. Our vision is to maximize our presence globally, and then it just adds up to number, whatever number it could be.
Just a small question, sir. If we were to become top 5 in packaging machine, what would be the sale that you have to do today, for example?
You will have to really understand the dynamics of how this works, because when we talk about top 5 companies globally, they are all conglomerates. The total global market for packaging machinery is about $8.3 billion. Out of which there are 4 companies that do $6 billion.
Okay.
Right. Each company is anywhere between $1.6 billion to $2.4 billion. But these are conglomerates. They have become what they have become by buying new companies and adding it to your portfolio.
Okay.
As a vision, I can tell you that there isn't a single Indian conglomerate in existence today. Can Mamata become the first Indian conglomerate is the question.
Got it. Thank you so much, sir. All the best.
Thank you, sir.
Thank you.
The future.
Next follow-up question is from the line of Lakshmi Narayan from Tunga Investments. Please go ahead. Lakshmi Narayan, your line is unmuted.
Yeah. Sorry, it wasn't. One question is that from an operating cash flow point of view, how should one think about it? Because for the first half, the operating cash flows have been negative. Do you think it will come to a steady state by year end? And if so, what is your outlook? And why there has been an increase? Why there has the cash flows have kind of compressed for the first half?
I think I will have to relook at this because I have looked at our figures and I don't see what you are saying that our cash flows are negative in H1. That is not the case. We continue to remain debt-free almost, and we don't see that thing changing. We are operating through our own approvals. We don't even have a line of credit from the bank.
I'm talking about the operating cash flows. It shows a negative 40 crores of operating cash flows.
So basically, the cash flow has been converted into FDR, so they have become non-current. That's why you see negative cash flow.
Sorry, can you just repeat it, sir? Sorry, I didn't get it.
The additional cash that was accrued has been converted into FDs.
Okay.
Because FDs are not considered as current, they are considered as non-current.
I could see. I could see that 41 crores of. Got it. Sorry, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Sahil Doshi from ThinkWise. Please go ahead.
Hello.
Hello.
Yeah. Good afternoon, sir, and thank you for the opportunity. Yeah, my question relates to the balance sheet and cash flow only. Could you just quantify what's the cash on books today? And just as a follow-on, just wanted to understand how do we think about this cash and the use of cash going forward?
Okay. As on 30th September, it was around 41 crores.
Okay.
61 crore FD. So there were FDs on 30th September. 30th September was about 40 crores, 41 crores as I said earlier. I've said this 6 months ago also. We are building up a war chest for financing our expansion plans and also finance any opportunistic acquisitions that we may identify in near future, because the growth can be had organically as well as inorganic, and for inorganic growth we will need money. So we are building a war chest.
Sure, sir. Understood. And just on clarity on the packaging machinery number which you said 46 crores last year. I think the presentation says 36. So is it we're including something else?
I'll have to look at it. Maybe I missed. But this year it is definitely 64.
Okay, got it. Understood. And just on the one of the earlier points in terms of the Mamata Enterprises, if we see the deferment of FY25, which was around 20 odd crores, and the revenue in subsidiaries, which is concerned minus standalone, is around 23 crores in H1 of this year. So does it mean that the entire deferment from last year has not yet come in revenues, or there is further deferment of the existing book or something of that sort?
There is no deferment as far as on date figures are concerned. Our execution in Mamata Enterprise is about 41 CR, and we have a pending order book of about 16.5 CR.
Okay, and the last year revenue of 20 odd crores which was deferred is completely booked, sir?
Yeah, it was completely booked. So 41 includes that 19 crores.
Okay, understood. Perfect. Thank you for the clarification. I'll come back in the queue for anything. Thank you.
Yeah.
Thank you. Next follow-up question is from the line of Sayyam Shah from Solidarity Advisors. Please go ahead.
So just one more question. Is there any benefit which we are seeing because of the GST rate cut that happened?
We do not see a direct benefit as such, but we believe, like everybody else believes, that because of GST reforms, particularly in FMCG sector, there is likely to be a spurt in demand because people have more money to spend. This is in combination of this ITR limit that has been extended for salaried class to up to 12 lakhs, I believe. There is no income tax payable. So that has also put substantial money in hands of middle class and lower middle class segment in India. And combination of these two will definitely, there is likely to be a GDP growth, or at least it will compensate for GDP that has been lost due to lower exports to USA. But FMCG, as the demand grows, so will the demand grow for packaging machines. So that is the connection. But that pass-through is going to take some time. It's not going to be immediate.
Got it. Thank you.
Thank you. Next follow-up question is from the line of Manish Goyal from Thinkwise Wealth Managers. Please proceed.
Thanks a lot for providing opportunity again. Sir, continuing on the packaging revenue for previous year, which probably shows 36 crore in presentation and 46 crore what you mentioned. So is that differential related to attachment and spares?
I had added some deferred sales. But this year we have already done about 36 crores, and we have order book, so total comes to 64.
No, sir. Sorry to interrupt, sir. What I was trying to probably clarify is that the breakup what you provide is the product revenue breakup, where we have the number of 36 crore. But apart from that, you have other revenue attachment and spares.
Yes, I'm talking of machinery.
So it is like to like. So basically, you will do 64 crores versus 36 crore machinery sales.
Yes.
And whatever attachment and spares would be separate, which is anyways okay. Sir, on packaging machine, we have been looking to enter Europe markets and Middle East markets. So, and you did mention that we have been hiring team. And would probably want to leverage on our existing customer base of the converting machines over there. So, sir, how is the progress in terms of creating visibility for our packaging machine? probably do you see that some of your existing customers can be converted, or how is it that, or it will be a newer set of customers? And ideally, by when do you think we should be able to get the first set of breakthroughs in this market? That was first set of questions. I'll probably ask the second question later, sir. Yeah.
We are working very hard at breakthrough. First of all, now we do have a team in place. So we have 2 full-time people in place for packaging, and these 2 people are being led by our president, Mr. Venkat Rajshekar. And we anticipate to have our breakthrough orders, as you call it, in Q3.
Oh, okay. Great, sir. And any sense on probably out of $8.3 billion market, what you alluded to earlier, how big would be, say, this Europe and Middle East, or maybe let's put it that probably low-hanging fruits for you in near term, where you can probably capture some of the orders in near term, sir?
Nearly 50% by 8.3 billion is USA itself. That is the largest market in the world for packaging machinery.
Oh, okay. And sir, my second question was on some of the new products which you had introduced recently, and one of them was VFFS, which ideally I understand is for small packets. So how is the progress and adoption or the success for us in that category, sir?
Now we have about 3 customers who are using, or 3 brand owners who are using this machine from Mamata, and we do expect a few more orders in near future.
Okay. Thank you so much, sir.
Thank you. Next question is from the line of Lalaram from LRS Capital. Please proceed.
Sir, I want to understand what is the ordering flow year to date versus last year.
I don't have that figure handy. I'll send it across.
Okay. Thank you.
There is a correction that I would like to make. Somebody asked a question as to what was the cash on hand on, I think Mr. Sai Doshi asked this question from ThinkWise, that what was the cash on hand as on 30th September? The answer is 71 crores. And not 41 crores, so I stand corrected. The cash on hand as on 30th September was 71 crores.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to Mr. Apurva Kane, Chief Executive Officer, for his closing remarks. Over to you, sir.
Thank you, friends, for joining this call today and giving us an opportunity to talk about our company to you. If there are any follow-up questions, you may please approach our TI consultants, our IR consultants, and we will try and do our best to answer those questions. Thank you very much once again for joining this call.
Thank you, sir. On behalf of Mamata Machinery Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.